Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's March 14th. We got a couple items on the docket today, so we'll start off with the NFIB Small Business Index. This is a gauge or index that kind of measures the confidence level for small businesses. So back in January, we saw 105.9, which we're at pretty much kind of record highs for these. These are actually really good numbers here. And it dipped a little bit down to 105.3. So still within range, still very high range, but it did dip a little bit here. Producer Price Index. This is a wholesale level inflation number, so we do keep an eye on it. It's not the most important, as tomorrow we'll get more important data, which will be the Consumer Price Index, which is the CPI number. But the Fed really looks at the PCE, which is the Personal Consumption Expenditure. That's their favorite gauge, but the CPI and the PCE has a little bit more weight in terms for weighing on the decisions for investors and stuff, or even with the Fed for that matter. Primarily because even though costs may go up sometimes on wholesale, it doesn't always get passed along to the consumer. So sometimes they'll work with less margin and pass the savings on to the consumer as a result of that. So what the Fed really looks at is what's being passed on to the consumer. So anyways, back in January, we saw a 0.6 increase of the Producer Price Index. Forecast for February was at 0.1, and it came in a little hotter than we expected. That brings the core, when you strip out the food and energy, our year over year at 1.8, and our headline number, this PPI here, at 2.2. So this is a number definitely the Fed will be watching here. And speaking of such, the FOMC begins their first day of their two-day meeting here, and then tomorrow we're expecting them to go ahead and to raise the rates tomorrow. We'll get that right around 11 o'clock Pacific Standard Time, that announcement. But again, they're expected to raise rates. The key thing is, because we are expecting them to raise rates, the key will be to check out what the statement will say. If it can be, there's some concerns that maybe they may, with the economy moving in a pretty good fashion here, that maybe they may raise the amount of rate hikes again. So rather than three rate hikes this year, maybe they might go to 4 rate hikes. So this is raising a little bit of a concern with some investors. So they want to kind of see what this statement, what kind of statement they'll see tomorrow here. So today you're seeing the stock market down. So part of it is getting settled in for any surprise statements from the Fed. They want to make sure, in case it's hawkish or not. If it's too hawkish, you may see the stock market pull back a bit as a result. Another thing that the stock market's down, the energy sector, is oil has been down, has been going down quite a bit lately, primarily because there's the larger inventories. You're seeing a lot of inventories here. So I guess that so-called agreement they had back in November is starting to wear off a little bit, and you're starting to see a lot of those countries, producing a lot more. Even Saudi Arabia came in higher than expected inventory levels here. Also, on a softer note, it hasn't really, you're not seeing headlines on it yet, but in England, in the UK, the Parliament went ahead and passed the ability to proceed with the Brexit. So this has been kind of on the backside for a while, but right around this time period, they were kind of expected to start pulling away from the EU, and you may start seeing that rise again, and it might spook the markets as a result, as a reminder that EU is kind of on the downturn here, because you're starting to see more and more countries kind of softening their stance on remaining a part of it. You're seeing France with Le Pen's trying to pull them out. If he becomes elected over there, you're seeing Netherlands, another one as well, and you may also start seeing other countries like Italy and Spain, and those guys might start pulling out eventually as well. So anyways, it's just kind of a reminder that the EU is having their difficulties over there remaining together, and you may see that coming in the near future here. So just be prepared for more headline news with the Brexit coming forward now that the Parliament passed the process to be able to legally proceed with their Brexit plans. All right, so let's go take a look at the bond market here. In the bond market, we're doing a little bit better. Yesterday, as you saw, we tanked quite a bit here. We closed down, I think it was like 34 basis points, closed just below the second level of support. We did start the day lower as well, but right now we're up at 19 basis points, so we're bringing ourselves above this second floor resistance, or floor support here, and we're up about 19 basis points, which gives us a little better pricing from where we left off yesterday. So that's obviously the good news here. Just be very cautious here. Again, the statements coming in tomorrow is going to be the big news tomorrow. So what the FOMC statement will come in tomorrow is what's going to drive the market, and that's the big news for this week. All right, folks. So if you guys want to get updated items here, I do just come over to Twitter. You can I do post throughout the day on Twitter underneath Mike Bjork here. Oops, sorry about that, folks. I do post on Twitter here underneath Mike Bjork. You can come over there and follow and get more updates throughout the day. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.